Welcome to the Financial Planning Certification Exam Lessons podcast. This is going to be a sample lesson of the full series of audio lessons which are available at the website fplessons.com. That means financialplanninglessons.com, fplessons.com. At the website, you can find the full series of audio lessons. The full series of audio lessons consists of 6 different sections. Those sections include general financial planning principles, professional conduct and regulation, insurance planning and insurance products, investment planning, tax planning, retirement savings and income planning, and finally estate planning. A total of 6 different sections. You can buy the individual sections at the website fplessons.com. All right, let's get on to this sample lesson. This is audio lessons for the Financial Planning Certification Exam. All of these lessons are protected by copyright, owned by Franz Amundsen, and all rights are reserved. This is audio lessons for the Financial Planning Certification Exam, Part 5, Retirement and Income Planning.
Hello and welcome to a review of retirement planning for the Financial Planning Certification Exam. This is Episode 1. Let's begin with Social Security, or OASDI. Okay, so these are covered by the Act, the Social Security Act, that instilled Social Security. So this is what we have. We have Social Security, right? That includes retirement, survivor, and disability benefits, which is included in the OASDI acronym. We've got Medicare under the Social Security Act. We've got unemployment insurance and supplemental security income, or SSI. So those are all included under the Social Security Act. So how does one pay into this system? A person is only fully insured for their whole life. So once you're insured for life. If they have 40 quarters of coverage, 40, okay? So to be fully insured under Social Security, you need 40 quarters of coverage. A quarter is not like your conventional, financial quarter. It is actually a legal term. So you might also see a synonym for this is Social Security credit, or just credit, all right? So quarter, credit, Social Security credit, all the same. And it's a legal term. It's not referring to our business quarters, our financial quarters, none of that, okay? So I don't think there will be questions on currently insured people, which is roughly 6 quarters of coverage. So let's just know the definition of fully insured, which is, again, 40 quarters. Okay, so who can participate in Social Security? So it's actually most people are covered under OASDI, but there are some employment categories where Social Security is not covering those people, all right? So let me just give you a little laundry list. All right, so some Americans that are working abroad, right? They're not paying into the system exactly, so kind of makes sense there. Some student nurses or students working for a college or a college club. Lines are pretty blurred there. This is the main one that should stand out. It's railroad employees. They have their own pension, which provides for them, so they don't need any Social Security. All right. Then we also have some federal employees that have been continuously working for the government since before 1984. We've got any child that's under 18 who is employed by a parent of an unincorporated business. That's another one that stands out, right? So if I'm a kid and I work for my daddy and he doesn't have an incorporated business, basically there's, no separation between himself and his business. He is the business, right? We've discussed this in the tax planning package and episodes. Then in that case, I am not covered under Social Security. We've also got ministers on the list. members of any religious order and any Christian Science practitioners if they claim an exemption. So if they claim an exemption, any religious order members cannot participate in Social Security, again, because they elected the exemption. It's all a little bit self-explanatory. And then any members of tribal councils. So anyone that is a member of the armed services, right? So the Army, Navy, Marines, etc., are covered under Social Security. Okay, so the standouts were railroad employees, children under 18 that are employed by a parent of an unincorporated business. We've got anyone that's part of a religious order that are member of a religious order that elects or claims the exemption, and then, anyone a part of a tribal council. Those are the real standouts for me. A little caveat with railroad employees. So although they have their own retirement system through the Railroad Retirement Board, they actually have eligibility for Medicare. Don't ask me why, but that is the case. So when you see railroad employee, think no Social Security, but they are eligible for Medicare. So this is where the water kind of muddies up a bit and where memorization really kicks in. So let's discuss eligibility and benefits. So there's two definitions. There's a worker and a spouse. So let's discuss workers first. A worker is entitled to, let's go to disability. So they're entitled to disability benefits if they're under 65 and have been disabled for 12 months, aka a year, and is expected to be disabled for at least another 12 months or a year. Or they have a disability that's expected to result in death. And on top of that, they've completed a 5-month waiting period. It's just memorization at this point. Okay, so let me repeat myself. We've got a worker is entitled for disability benefits if they're under 65, because at that point, you hit retirement, you don't need these disability benefits. You can just get Social Security. All right, so you can logically think of it like that. So if you're under 65, you've been disabled for a year, and you're expected to be disabled for another year. Or completely separately, you're disabled and you're expected to die because of the disability, and you've waited 5 months. That is when you're entitled to disability benefits. We have an retired insured worker. I really just combined those two words. Love that. So a retired insured worker, right? Remember we defined what insured means, 40 quarters of coverage. So someone who is retired and insured that's age 62 or over is entitled to retirement benefits or Social Security payments. That's the simple one. That's the one I feel like most people know. So 62 is the age for insured worker that is entitled to retirement benefits or Social Security payments, as everyone knows it as. All right. Lastly, we have an individual that has filed for disability and has completed the waiting period of 5 months. Moving on to spouse. So we just discussed workers. So let's move on to spouses. So a spouse of a retired or disabled worker can get Social Security payments if they are age 62 or over, or they have a child in care under 16, or, follow me here, they have a child that is 16 or over, but the child was disabled before they turned 22. So that was a lot that I just threw at you. Let's kind of break it down, okay? So let's say that my spouse is either retired or disabled, and he's eligible. Everything is fine. He's getting his benefits, etc. So I qualify for Social Security payments as well if I am 62 or over, so that it'll kick in at 62, normal retirement age, or early retirement age, but what is allowed by Social Security, so maybe you could think of it that way. Or I have a child, I could be any age, I could be 22, and I could have a child that's in my care. Well, the math doesn't really work out. let's say I'm 40. Okay, that was a bit of a mistake. So let's say I'm 40, and I have a child that's under the age of 16 that I'm taking care of. Regardless of my age, I don't have to reach 62 to be qualified for Social Security payments if my spouse is retired or disabled. Because think of it like you have a little kid. It's expensive to maintain young children. And then to remember age 16, think, labor laws, kids can go out and work at 16. And they, can drive. They should have like a license by 16. So that's how you can kind of remember those. Just erase the 22-year-old example. Yeah, the math doesn't really work out on that. So that was a little silly, but hopefully it'll help you remember. All right. So you could be any age, but if you have a child that's under 16, they can't drive themselves around, they can't get a job, you are also entitled to Social Security payments. Moving on to the next one. So this is if, let's say that child, or let's say my spouse dies and I do have a child, but they are 16, but they're disabled, then I still get Social Security benefits. However, if I had a child and they were not disabled and they turned 16, 17, 18, then I'm not allowed to qualify for Social Security payments in that case. I hope that makes sense. And then the disabled before age 22 is just trying to make sure it's a disability that was onset early in life, that the child needs like full support and might not have the means or had worked or whatever it might be. You can maybe think of it like that. Hope that helped rather than confuse. Moving on to surviving spouses. So this also includes surviving divorced spouses. That's a whole other thing. We'll discuss it in a second. But if you're a surviving spouse of a dead insured worker, okay, so remember they have to be insured. All right, so if my spouse dies, then I qualify for Social Security payments if I am at least 60 or over. Okay, and this is kind of how I liked to differentiate these two numbers. So if my husband is retired, that's a lot less dire than my husband being dead. Because my husband retiring is not as urgent, they give it to me at 62, but because my husband dying is a little more urgent, they give me those 2 years. They're like, okay, you can get it sooner. You can get Social Security payments sooner at age 60. I hope that helps. That helped me kind of memorize the difference between if my spouse dies versus if they retire or get disabled. So remember, death is more severe, so I can get my benefits, my Social Security benefits sooner at 60 rather than if my husband retires or is disabled, then I'll get it at 62. Let's discuss divorce. Lovely divorce. So a divorced spouse must have been married to the insured worker for a minimum of 10 years, okay? I remembered this with, you marry someone for 10 years, you can leave with half their assets. So if you marry someone for 10 years, then you can also get some of their Social Security benefits. So I hope that kind of helps you out. So I must have been married to Joe Schmo for 10 years, and I must not be remarried in order to get divorced spouse benefits. Also, if I'm at least age 62 and have been divorced for at least 2 years, I can receive retirement benefits that are based on my husband's earnings, even if my ex-spouse, continues to be employed. That's a little confusing. So let's just separate that up. So we've got marriage for 10 years, and I'm not remarried. And then if I'm at least 62, so let's say I am 62, and I've been divorced from Joe Schmo for at least 2 years, I can get Joe Schmo's, not his retirement benefits, but I can get retirement benefits based on Joe Schmo's earnings, even if Joe Schmo is still employed at Schmo Incorporated. That's basically what I just said. I hope the Schmoes didn't throw you out of whack there, all right? Again, pure memorization here. You really can't do anything about it. So, the surviving spouse of a dead insured worker, regardless of age, does qualify for Social Security payments if they're caring for an entitled child of the deceased who's either under 16 or disabled before 22. Just a little reminder, a little succinct sentence for you, but we kind of discussed that. All right, dependent children, or a dependent or a child. So, any surviving dependent or unmarried child of a deceased, disabled, or retired insured worker can get Social Security payments if the child is under 19 and a full-time elementary or secondary school student, or 18 and over, but has a disability that began before age 22. So basically, if, there's a child and their parent dies, or is disabled, or is retired, they can get Social Security payments if they're under 18 and a student, not a college student, right? Because if you're under 18 and a student, you're most likely in middle school or high school. When you see questions like this, you just got to know, hey, I'm not dealing with college students, right? You're over 19 at that point. You're not qualifying for this. This is purely for the children that are still under grade 12. Think of it like that. And then again, if you're over 18, but you got a disability that you've gotten before the age 22, you are also entitled to benefits. That kind of goes across the board there. So let's discuss some strategies for Social Security. So you actually have it's called a one-time right to withdraw. This is when you make a little boo-boo. If you're like, you know what, I'm sick of working. I want to retire at 62. I'm sick of everything. Blow a raspberry in corporate America's face, okay? I do that. I'm 3 months in, and I'm like, goodness gracious, what have I done? I regret this. I miss my corporate grind. So in that scenario, you would have one-time right to withdraw my application for retirement benefits if I make it within 12 months after my benefits begin. So I'm 61 and 11 months, and I'm like, I am ready for retirement. I see the pina coladas. I see the beach. It's there. I taste it. I apply for retirement benefits, and then again, 3 months later, I'm like, I am sunburned. My pina coladas melted. I can't handle this. So I got to go back. What is that? A one-time right to withdraw. I can withdraw my application, the benefits stop, and no guarantees your employer will take you back, but at least you're not starting retirement earlier than you actually want to now that you've realized what you want, because there is a penalty, which we'll discuss, for retiring at age 62 rather than full retirement age of 65. So think of it like that. One-time right to withdraw. And then there's also a file and suspend strategy, and that's eliminated. So let me give you a summary rundown of the benefits or benefit eligibility for Social Security. So a fully insured worker, right? We discussed what that means. They are eligible for all the benefits we've discussed, plus a generous lump sum death benefit of $255. Obviously, this hasn't been inflated since they probably enacted the act, but it is real. It is there. You got a client, their spouse dies, they get a check in the mail, and they're indignant because they're like, what is $255 supposed to do? But it actually had good purpose back in the day. It was supposed to help with funeral costs. That's why it was a lump sum. But anyway, that was a fun little story. So yeah, don't forget that little tidbit. A currently insured worker is only eligible for what I'm about to list off. So we've got that lump sum death benefit, $255, pretty hefty if you ask me. We've got a surviving spouse's benefits. So if the children are under age 16, remember, I've got kids, they can't drive themselves, they can't get a job. That means I'm entitled to some benefits. And then a dependent benefit, right, which is your children. Great. So let's see who is eligible for this 255 lump sum death benefit. A spouse who is living in the same household as the deceased, okay, when they died, or a dependent child. But you can't double dip. It's one or the other, not both, okay? So I had to be living with my husband when he passed away for me to get that $255, that coveted amount, or the dependent child's going to get it, okay? Or my kid is going to get it if I wasn't living with my husband at that time, whatever it might be. Let's move on to benefit calculation. So we've got this concept of primary insurance amount, or PIA, and it's the basic unit that's used to calculate the amount of the monthly benefits that are payable under Social Security. So you calculate it by using up to 35 years of a worker's average index monthly earnings. That is abbreviated to, or acronymed to AIME, AIME, so average index monthly earnings. And a spouse or divorced spouse can be entitled to a PIA that is 50% or more of the worker's PIA. Okay, so that's how we calculate benefits is PIA. And just know that a spouse or a divorced spouse is entitled to 50% plus of the worker's PIA. Just a little note, current spouses, in order for them to receive benefits on the worker's PIA, the worker must be receiving benefits. So a divorced spouse can receive benefits at age 52 based on the worker's PIA, whether or not they've started receiving their Social Security benefits, okay? But current spouses can only get it when their spouse retires. So let me put it in different terms. So I'm a current spouse of Joe Schmo, right? And, I want some benefits, but I have to wait as a spouse for my spousal benefits. I'm not an insured worker or what have it. I have to wait for Joe Schmo to retire and claim his benefits before I can get mine. However, if I divorced Joe Schmo, then at age 62, I can get my benefits based on Joe Schmo's PIA, whether or not he's retired and receiving benefits or not. That's the more plain English version. All right, that concludes our first episode for retirement planning. This is the Social Security episode. We covered OASDI, participation in Social Security, eligibility and benefits of workers, spouses, divorced spouses, and dependent children, Social Security strategies, benefit eligibility, and calculation of benefits.